welcome once again to the Golden Nugget show that happens at 11:30 a.m. Eastern Standard Time every single Wednesday on the legendary Verified Investing YouTube channel, and we stream it simulcast on the Drew Wolfer personal channel. So whatever channel that you are here on, we appreciate you. We would not have a platform without you. So much love to you for all the people that show up every single week, and for the new people that are showing up this week. Now, we are riding high. If you watched last week on some gains, we gave you a gold trade, we gave you a silver trade. So if you took if you took the silver trade last week, you made like 13% on that swing trade since the last time that you saw me. Okay, same thing with gold. You didn't make 13%, right? Because gold didn't move 13%, but you did potentially make some gains on gold, and that is what the Golden Nugget is for. Okay, so that is what we're going to do. We are going to gauge gold first, do some TA. Then we are going to do the silver snapshot, which is TA on silver. Then we're going to tell you inside of the commodity compass. We have a lot of different segments to get through, right? The third segment is going to be the commodity compass, where we tell you everything that is happening inside of the gold and silver, or just the metals markets in general, that is moving the needle. Then we will get into our knowledge bank, which is actually, called the Golden Nugget, where I give you some type of insight from the actual training that we just brought out, I myself, in conjunction with Verified Investing, called the Golden Opportunity, that teaches you exactly how I have an 84% win rate inside of gold right now, okay? Documented and verified inside of Verified Investing's community. Now, the next segments after that, okay, will be our... I can't say what they are. They are two special segments, and I'll tell you what they are whenever we get there. And then lastly, we will talk about what is on the economic calendar and the things that you need to be watching out for from the time that you see me this week until, you guessed it, the time you see me next week, 11:30 Eastern Standard Time, United States, for the Golden Nugget yet again. Let's see if we can ride high on some gains again next week. I know I only see you once a week, so I try to give you a good trade, nice little swing trade, at least one that you can actually take some actionable trades on. So last week that actually worked out extremely well. So let's get into our very first segment, and that is going to be called Gauging Gold. So if you look at the chart, you see what's going on. We've got an upward sloping trend channel, right? And this thing has been very well respected. We've been trading this. We'll just say we've been trading this. Okay. So last week I gave out two trades. All right. There's a nice little cup and handle that was happening on the 1 hour chart. Okay. We've been talking about this thing for a while. We've been waiting for it to break out. It's finally starting to break out, and we're trying to get that retest. We got close to a retest. We got a little kiss here, okay? But we did bounce from the bottom end of this channel. So if you took the trade that I suggested last week, you made significant gains, because we went right up to the consolidation zone that we were talking about, which was right here. Did we hit the top end of it? No, but we did get up here and actually close candles above these previous swing highs right here and starting to trend up a little bit. Okay, so I'm also going to teach you something inside of the knowledge bank, which is the Golden Nugget, that could be pretty actionable. So let's see what we were talking about last week. There were two potential trades. Take this trade right here, go long whenever we hit the bottom end of the trend channel and the bottom end of the cup and handle, right? And then my insights were, okay, if we are to take this trade, say we take this trade right here, and we're going to take them off so that you can see everything. Say we take this trade right here, and we start coming up here and we start taking out these moving averages, right? This is where you can start thinking about adding to your position. And once we broke out of this cup and handle with a confirmation, this is where you can start thinking about adding to that long position even further. And that exactly is what we did. Okay, now we've come back down, retested those moving averages, and we are trying to get back above them. So we will see if we actually get that bump up, okay? And just pay attention for the Golden Nugget that I'm going to give you in 2 segments from now, so that you can see the actionable insight and the teaching that I'm about to do to kind of show you what could be potentially happening right here, okay? Because a lot of people might think this is bearish, but this could actually be a bullish formation if it plays out the way that I think it might, okay? So now what we want to do is we still want to short if we break down below and then bearishly back test the bottom end of this trend channel, okay? Has that happened yet? No, it has not. But why would we want to short there? Well, we are breaking a 7-month all the way back to November, right? And worst case scenario, all the way back to December of an uptrend, okay? So as it sits right now, your two trades, say you took this one, right? You made a pretty decent amount of money, okay? We went, let's see how far we went. That was about a 3% move up on gold. So that's a pretty sizable amount to move up on gold in just a couple of days, right? And what we were targeting was this previous consolidation range, as you can see right here. Now, we hit right in the middle of it. We did not hit the top end of it. So this is just something that you have to, these are game time decisions. Is it topping out here? Do I take profits here? Most likely people did what happened right here is probably this, right? You probably took a 5x risk to reward ratio trade, bing, bang, boom, made a good amount of profit, 2.7% upside, right? Now, secondarily, all we do, we keep trading this thing until it invalidates the level. That's the beauty of these trades. A lot of time when I'm giving you these trades, it's going to keep hitting, okay? Especially when you're banging up against the bottom end of these trend lines or the top end of these trend lines. As you can see, you could have shorted here, could have shorted here, could have shorted here, could have shorted here, could have longed here, long here. And if we come back down here, we long here. But guess what? There's two scenarios, right? We either bounce here and we go up, which gives you your long, right? And you come up here to try to take out these swing highs. That's your target, right? Or we break down and you stop out of your long and you take a short. Okay. Now there is a max pain scenario where it could just come down here, stop you out. You get into your short and then it rips back up. So you have to, these are game time decisions that you have to make. But for all intents and purposes, these are the trades. And I'm going to give you an actionable insight on what could be potentially happening inside of gold as it sits right now, because a lot of people are going to think, hey, that looks like a bear flag. Okay. But I'm going to give you an alternate look at that so that you can be 100% ready for whatever happens, because these are the things, what I'm going to teach you inside of the Golden Nugget segment here in just a couple of segments, that literally only pro traders know this stuff. And this is the type of stuff that you're going to learn inside of the golden opportunity, if you so choose to get into that training with the other, over 36 people that are in it as it sits right now after it's only been launched for about 2 weeks. Now, what we're going to do is get into what is called the silver snapshot, and we are going to talk about the absolute monster, the monstrosity of a trade that we took last week. And oh my gosh, look how this bad boy worked out for us. This thing was absolutely beautiful. We took 7.5%, over 7.6%. Look at the risk to reward on this thing. This thing was a 14x risk to reward. So I misspoke earlier when I said 13. I think I said 13%. 13 risk to reward ratio. It was actually a 7.5% trade. So sorry about that. I did misspeak a little bit earlier. Now, why did we take this trade? Well, last week we were talking about this bull flag, okay? And if you go to the 4-hour chart or even the 8-hour chart, you can see this bull flag a lot better, right? You can tell this is a nice bull flag, big move up, consolidation down to the right? That's what we want to see inside of a bull flag. And then your breakout, your back test, we enter, boom, target acquired, target absolutely smashed. We took some profits here, we took some profits here, took everything off of the table and waited for the pullback. So this is a absolutely legendary trade that we literally took last week. So what can we do now? Okay, well, first and foremost, you're going to be seeing a little bit of support right here in this range, right? So right at about 37.23, right? Okay. Secondarily, you are now seeing support at the 1.618 Fibonacci, because we absolutely blasted and smashed through that. What is that 1.618 Fibonacci from, you ask? Okay, I will show you. I have no problem doing that. It is right over here. If you take the ultimate high way over here, right, where we double topped, and you take that all the way down to this swing low, it then gives you extension levels that say, hey, if we invalidate this entire range, we retrace this entire move, here's where we could be going. bang, and there we went right to it, right? So that's exactly why I said this 1.618 was going to be such a key and critical level for us to watch for whenever we get up to it. So there's two scenarios that could potentially happen here, right? One, let's go ahead and pull up this downward sloping parallel channel, okay? This downward sloping parallel channel is now going to act as support, but you don't want to rely on this for support now, because now what we have is all of the moving averages in a pretty bullish formation. This is the 200 moving average. This red line is the 100 moving average. This is the 50 moving average, the blue line, and the pink line is the 20. And then we have the 9, which is the yellow line, right? So we're pretty close to a bullish formation. But as it sits right now, if we go down to the hourly chart, you can see that we have lost, okay? We came down, we used the 50 as support, we lost it. We used the 100 as support, now we've lost it. The next likely scenario is coming right down to this 200 dynamic support and resistance line. You would really like to stay above that. And where does that coincide with? This level right here, okay? Look at that. They line up so perfectly. This is why technical analysis is such a key, critical thing. And it is a skill that you have to have that no one can take from you once you actually learn it, okay? So say we come down and we confirm below this level, and then we break, okay? You're going to potentially enter a short here, okay? And I'm not saying that you have to enter this short. You need to wait until I, kind of give you the full synopsis and analysis here. But this is the short that you would likely be taking, right? This is the short that you would likely be taking. 5.5x risk to reward, right? You could go down further than this. I would not be pushing it. I would probably be ranging towards this consolidation zone right after the breakout, right? But what you have to do, trading is managed. It's not just set it and forget it. Oh, I just set this, I set my stop loss, and if we hit here, great. Because what if it comes down right here and then it pumps, round trips you, and you turned a winning trade into a losing trade? You don't want to do that. So my point is that you have to watch this level right here, okay? Which is the 200 moving average. See how price reacts there. Secondarily, you need to watch this level and see how price reacts there. Are we going to front run that level right here with all of these little supports? Are we going to front run that level, or is it going to get respected and go all the way down? Secondarily, if we were to bounce, okay, there's a couple of scenarios that could happen here. You could bounce from the 200 moving average. Sorry about that. I went off of the wrong chart. Okay, so let's get this short position off of here, and I'll show you exactly what I mean. We could bounce from this 200 moving average, and you could set an incredibly tight stop loss on this, like incredibly tight. You could have anywhere from a 5x to a 10x risk to reward on this, depending on how tight your stop loss is. So you could potentially long it at this 200 moving average, right? And then if you break back above this, you could start adding to your position here and then targeting the upper end of that trend channel yet again. And then again, managing your trade, understanding that something could happen here. If you break above this, again, you're going to keep longing, and then you're going to ride this thing up to potentially upwards of towards $50, which is that 2.618 fib. Now that would be a massive swing trade, so you'd have to be holding that for a long time. But my point is that if we do get back up here after you have longed, that is a good place to start taking profits. Okay, so now secondarily, let's get into some of our other segments. And if you know anything about me, I have them right here on my screen. That way I can be mindful of your time and cognizant of your time, because I want to be respectful of that. Okay, this is called the commodity compass. This is going to tell you exactly what is happening inside of the metals market so that you know what you're looking for. These are things, if any of this sounds foreign to you, if any of this sounds confusing to you, I promise you, if you get inside of the golden opportunity, it is a 14-hour training. It is not meant to be taken over a weekend, right? It is robust, to say the least. But I promise you, I explain all of these concepts in such further in-depth analysis that you will understand everything that I am talking about on this show, because there's no way I can fit all of it into, a 15 to 30 minute show, or even an hour-long show for that matter, right? So what is happening inside of gold, silver, and the metals markets? First, gold is rebounding from a softer dollar, and the treasury yields are starting to retreat, okay? There's economic data that has come out that is obviously pushing this. But let's talk about some other things first. So the synopsis on this is going to be that basically spot gold has risen about 0.5% to, a little bit over the $3,330 range as it sits right now. Okay, we're at like 33, now we're at 33.24. Okay, so we're holding that $3,300 line. This is supported by the US dollar weakening and also the 10-year treasury yields falling. Okay, so markets are focusing on the shifting to the US producer price index numbers that just came out this morning and the CPI numbers that came out yesterday. Okay, so we're going to talk about that a little bit more. I'm not going to go too terribly in depth with that because I'll give you a spoiler. One of our special segments is called the Inflation Insights. So we'll talk about CPI and PPI there, right? Then we have India, okay? Their June gold imports fell by 40%, 40%, okay? This is falling demand in the number 2 user and importer, the consumer of gold, okay? So this could weigh heavily on the gold market in a negative way if a correction isn't coming, okay, to that demand. All right. Now we also have Trump putting a 50-day ultimatum on Russia with sanctions and tariffs. Okay. And what's that ultimatum? We'll talk about that in our special segment. Now, I want to do the golden nugget. Okay. And I've got 2 topics for this. Okay. So one, we're not going to use any visual aids. Okay. And the second one, we're going to use visual aids. I'm going to teach you 2 things that I am teaching very, very much further in depth inside of the Golden Opportunity. Kind of gives you a preview of what is in there to see if that's something that you would like to enroll in, right? And secondarily, that is the first link in the description. So if you want to get into the Golden Opportunity, feel free. Would love to have you in there. I'm in there every single day. You can ask me questions. We can, banter together and we can learn all about trading because this is not just about gold, silver. This rings true across all markets. So if you learn inside of the Golden Opportunity, it's not just the golden opportunity for metals. It's the golden opportunity for every financial market. Forex, crypto, equities, whatever it is that you trade, I promise this will ring true to it. Now, trading gold around the interest rate inflation dynamics, okay? So with sticky inflation data, such as like the June CPI and the PPI that we'll talk about in the Inflation Insights segment, okay? And sustained rate expectations, because now we've got the Fed kind of jockeying for position. We've got our chairs, our vice chairs, our vice presidents and stuff. They're all mixed. Hey, we need to hold rates. Hey, we need to decrease rates, right? Watch your PPI and CPI releases and Fed commentary for rate guidance, okay? Then you can align your entry and exit triggers when real rates drop into the negative zone, okay? And what do I mean by that? Whenever they drop, okay? So this is something that's going to help you gauge the market before it actually happens, because what is a precursor to the actual rates dropping, which then, as we know, as I've said in pretty much every segment ever, pumps gold, right? When rates drop, gold pumps for the most part, right? Inflation comes before that. And when inflation slows, they start to decrease rates. When inflation is up, they're less likely to decrease rates. They'll either hold them steady or sometimes they'll increase rates, okay? Now, that is something that you can, obviously learn more about inside of the Golden Opportunity. But I want to talk about a second topic, which is when charting patterns fail, okay? And I'm going to give you a concrete example and some resources from inside of the Golden Opportunity that show you exactly what I am talking about, okay? So let's get into the charts for this segment, okay? Now, first and foremost, we're going to take all of this stuff off of our chart, okay? Now, you're probably looking at this and you're saying, hey, Drew, this looks an awful lot like a bear flag, right? This looks an awful lot like a bear flag. So let's go ahead and make that bear flag and put it up here, right? Bam, right? So this would technically be our bear flag, right? Something along those lines. Now, what I want to show you is something that we've done inside of the Golden Opportunity. I put a lot of time and effort into this so that people have these resources and it explains what a bear flag actually is and what it looks like. But what if I told you that if the bear flag breaks up, it's actually a different charting pattern and that you need to have market context in order to understand this? Well, I'm going to show you exactly what charting pattern it is. Let me scroll all the way up. Bang. This is called the three rising peaks bullish charting pattern. And when a bear flag breaks down, if you look at it, that looks eerily similar, right? So when you see three rising peaks, here's your first peak, here's your second peak, here's your third peak. Even if you don't take this as a peak, right? Let's say that's not a peak. Here's your first peak, here's your second peak. You are now bouncing off of the bottom end of that. Could this now turn into a three rising peaks pattern and then become bullish? It absolutely could. So in the broader context of the markets, you need to make sure that whenever you're looking at these patterns, you have to understand the nuanced details behind them. Bear flags are usually continuation patterns. Does this look bearish to you? It doesn't. It doesn't really look that bearish. Now, I'm not saying it's not bearish, because you could have, a absolutely ascending triangle here, which is a bearish pattern, right? But these are usually continuation patterns. They don't necessarily usually come at the top of markets. They'll come after the market has gone down, and you'll see these bear flags happen, and bear flag and bear flag and bear flag, right? But when the market is trending up and you have things in the background like this that are happening, this could just turn into a three rising peaks pattern like we see right here that could be a bullish pattern. So in the broader context of the markets, you need to ensure that you are looking at everything in its totality, okay? Don't just look at, oh, this is a bear flag. Understand what the market is doing. Understand that we have a 7-month uptrend and that we are reaching bottom end resistance or bottom end support on that uptrend as we speak right now that could turn this into a bullish pattern and formation, okay? So with that being said, let's get into our special segments, and this is going to be called the market movers, okay? So what's moving the markets inside of everything that's happening right now? Well, first and foremost, gold imports plunged by 40% in India. We know about that, right? So they dropped to just under 21 tons in June. That's still a lot of gold, right? But they import a lot more than that. This is the lowest that they have imported since April of 2023, and due to record high domestic prices, which in their currency was $101,000 per 10 grams of gold, insane. We're up near all-time highs. Like, we're within 275 bucks. Not even 175 bucks of all-time highs, right? In terms of US dollar, okay? And whenever this falling demand is happening inside of the world's #2 user and consumer of gold, you have to take notice of that. And then what you can do is you can go out and you can see, okay, even though India isn't necessarily like importing, this is a BRICS nation, right? So India is a key player inside of the gold market. BRICS nations, Brazil, Russia, India, China, South Africa, right? The gold guys, right? And so obviously this is something that needs to be taken note of in the broader context of the market, okay? But you can also go and look, are the central banks buying more gold? Is there demand elsewhere that is circumnavigating the lowered demand inside of India's importing, okay? So don't just look at the news headlines. And again, this is stuff that we teach inside of the Golden Opportunity. Don't just look at the news headlines and say, oh, India is, consuming 40% less gold at pretty much all-time highs. That means gold's going to go down. We don't know that for a fact. We need to look at other things that are happening inside of the market. Then we have Trump. Big Daddy Trump, Trumpity Trump, right? He is putting a 50-day ultimatum. He has now put a 50-day ultimatum on his buddy, who we thought was his buddy, Putin, with sanctions and tariffs. If no ceasefire is met or, enacted on Russians for the Ukraine conflict, okay? Now, he will slap within 50 days, if this is not done, he will slap 100% tariffs on Russians and secondary penalties on their oil buyers. So that means not only are they slapping 100% tariffs on them, but also the people that are doing business with them. Not 100% tariffs, but there will be secondary penalties for them, right? Just because they're buying from Russia. So he's trying to put a lot of pressure on them. Now, the markets are going to see this as a geopolitical risk, okay? So watch for sudden energy shocks and how gold might benefit because it is a safe haven because of that, right? So last special report, inflation insights. This is where we talk about PPI, CPI, and the reactions to it, right? So US PPI happened at 8:30 this morning, okay? So after June's CPI, everybody was waiting for this to come out today. So here's the results, okay? This was released, again, early 8:30 this morning, Eastern Standard Time. Month over month final demand of PPI was actually at 0, okay? Forecast was at positive 0.2%, and the prior month was 0.3%. This was obviously revised numbers, okay? Now, that means that PPI went down, right? Month over month core PPI was at 0% as well when estimates were at 0.2. We had year over year final demand being at 2.3 when estimates were at 2.5, right? And last month was 2.7. So still trending down. Year over year core was at 2.6. Estimates were at 2.7. That's the main number, right? And last month it was 3.2%. So it's easing, okay? So the monthly final demand of PPI came in flat. That's essentially what we're seeing, missing the 0.2% consensus. Core PPI was also unchanged, so softer than the 0.2 estimate. Annual PPI slowed to 2.3% and its lowest rate since September. Now, tariffs have softened goods inflation, okay, but weakness in the service sector pricing like transportation and lodging, that actually weighted on overall levels, okay? Then we have muted wholesale inflation, okay, suggesting slower pressure on future consumer prices, reinforcing hopes of a more dovish Fed decision, okay? So hopefully interest rates going down. So financial markets are reacting positively where the equities markets were actually up in trading, right? Futures were ticking up. The dollar actually went down, right? DXY, and then the bond yields actually declined, and now they are down to 4.46%. So the flat PPI, at least from a broader understanding, is a sign that inflation pressure is easing, okay? Reinforcing the market bets on a Fed decision to lower interest rate, a pause or a pivot, right? And this can actually help support gold prices because we know whenever those interest rates go down, gold tends to go up. So US equities and bond yields reacted positively to this news. And this is a lesson, right? This is a lesson on watching early inflation numbers to then understand, are we going to lower, pause, or raise rates? And in this case, it's looking a lot more like there's going to be a lot more pressure on, hey, you need to lower those rates. Boom, gold pumps up, right? So CPI also came in as expected. And the Fed has a lot of discord on whether or not rates are going to stay the same or go down, okay? So census data showed that June CPI matched forecasts of negative 0.1%, which is helping stabilize the inflation expectation. So when inflation starts to stabilize, that's when rates can start thinking about going down, okay? But Fed officials, they're still remaining split on their decisions. Some are saying, hey, keep the rates steady. Some are saying, hey, take the rates down. So some are leaning hawkish, hey, stay here. And some are, saying there's room for cuts. So we'll see how everything plays out, but it's looking a little bit more like we are leaning more towards a potential rate cut in the more near-term future, not like today, right? So what is on the economic calendar until you see me again at 11:30 Eastern Standard Time next Wednesday for the Golden Nugget on the legendary Verified Investing YouTube channel or the Drew Wolfer channel, whichever one you're on, we appreciate you, right? So today we obviously had PPI. We have the industrial production, which that already has happened, okay? And then we have the Fed speeches for Cleveland, Dallas, New York, right? That's where we're having the Fed is speaking, okay? Tomorrow we have weekly jobless claims. Pay attention for this. Retail sales. Pay attention to this as well. These are the things that we teach inside of the Golden Opportunity. I tell you exactly what ones to pay attention to and which ones to just not necessarily pay as much attention to. Philadelphia Fed manufacturing, right? Import prices, and then NAHB housing indexes, okay? So business inventories, right? Then on Friday, we have building permits and housing starts. And then we have the University of Michigan's preliminary sentiment. Okay, this is something you need to pay attention to. University of Michigan has a sentiment report that comes out. And this is something that it does move markets sometimes, right? No major news on Monday. Obviously, we're closed, Saturday and Sunday, the gold markets. Then you have US CPI for July will be, next month. Okay, so then on Wednesday of next week, it'll be like right before this next airs will be the existing home sales. Okay. So just pay attention to those things inside of the market while we are, awaiting what's going to, happen in the next Golden Nugget next Wednesday. So with that being said, thank you all so very much for showing up. I appreciate you so much. I know Verified Investing appreciates you so much. If you want to get into the golden opportunity and learn all the things that I teach in here in a more structured way, and go at your own pace, and with me to guide you there as your golden guide the entire way, feel free to do so. It's the first link in the description. I appreciate you so much. Everybody have a wonderful day, and I will see you next week for the Golden Nugget at 11:30 Eastern Standard Time.
Imagine waking up every day with freedom. No boss, no clock, just you, your charts, and profit stacking. That is the life of a verified pro trader, and it's exactly how I built mine, by learning to trade gold the right way. I've helped countless members start winning, and now it's your turn. This is your golden opportunity to trade like a pro, live like a boss, and take advantage of the gold super cycle that is transferring wealth like we've never witnessed before. So make this your golden opportunity.